Hi everybody, Jeff Yasteen here. Make sure to like and subscribe to our YouTube channel and to follow me on Twitter and on Facebook, and leave some comments below as well. Well, in the past few months I've told you about two drone stocks I like, and today I want to tell you about a third. Now, the first drone stock I gave you was Kratos Defense and Security, KTOS. It's up about 10% or so right now, and it continues to get military contracts for its jet-powered drones. The second was Raytheon Technologies, RTX. Now, it's not exactly a pure play, but if we're going to have an economy in which autonomous drones are, making deliveries, we're going to need a new kind of air traffic control system to track, monitor, and route those sorts of vehicles from place to place, just like commercial planes. And Raytheon has that technology. The third drone stock is a Chinese company. It's called EHang, symbol EH, traded on the NASDAQ. And as this video shows, EHang makes AAVs, or autonomous aerial vehicles, big ones, designed to carry up to 2 human passengers. And the company has begun holding demonstration flights of these all-electric drones. You can find videos of these yourself on YouTube. You step into the craft, you close the hatch, you power up the flight controls. EHang's command and control and flight guidance systems does the rest. No pilot's license necessary. Isn't that amazing? Now, according to the company's specs, this model, the EHang 216, can carry 2 people, 485 pounds total payload, and fly them at a top speed of up to 80 miles an hour with a maximum range, with a battery and all that, of 22 miles. The main cockpit, or capsule if you will, is about 6 feet long, and from propeller to propeller it has about an 18-foot wingspan. Now, the company has run more than 2,000 flight tests in a range of weather conditions, and it's also begun holding demo flights outside of China. This video is published by the Raleigh News and Observer newspaper in North Carolina, a flight exhibition held in that city, Raleigh, early this year and attended by the state's governor. They've also done flights in Vienna and elsewhere. Now, regarding EHang, I think I know what you're thinking. Chinese companies are held in, somewhat low regard in some quarters these days. The Trump administration has talked about wanting to delist Chinese companies from U.S. stock exchanges, or certain ones anyway. And in the current climate, there are certainly those risks when investing or speculating in this sector of the stock market. But EHang has been around since about 2014, and I followed the company at a distance pretty much since day one. I remember when the company first announced plans for the development of these passenger drones, and I had wondered back then, 6 years ago, whether it would really happen or not, and if the technology would truly be ready for prime time, even after 6 years. But the company told Wall Street analysts a few months ago that Chinese air transportation regulators have approved the world's first commercial pilot operational approval license for use of these passenger-grade drones for air logistics. And Canada's civil aviation authorities have also reportedly granted what they're calling a special flight operations certificate. So the company's first aim here is to create a market for passenger drone tourism, get people familiar with the idea. So the idea is you could hop into one of these for a ride, sponsored by your hotel or at a major resort or tourism area, much as you might have done before the pandemic in a helicopter, but of course at much greater cost. But the company's real aim here is to create a market for what it calls urban air mobility. EHang hopes to have fleets of these passenger drones in coming years, and to do that, the company's building these command centers. It has 3 of them in as many Chinese cities, and it has also developed a landing and takeoff hub concept, as yet unbuilt, that would largely automate the process of boarding passengers, launching the drones, recovering others as they come in for landing with small robots underfoot. They look familiar to the ones that Amazon warehouses use, which can haul the drones around the hangar deck. So all that sounds pretty cool. But by the way, the company also has autonomous drones for other uses, non-passenger uses. It recently debuted this large capacity freight hauling drone, and when you compare to others that, I've seen in demonstration videos from other companies, you don't realize how large it really is until you see a pair of humans like these standing next to the EHang drone. They also have this firefighting drone, which they hope might be used for fighting fires in tall buildings. It can spray fire retarding foam or launch these fire extinguishing canisters that contain, basically a fire killing chemical agent. So what about the business itself? Well, it's still early. Like most development stage companies, there's plenty of risk to go around, lots of promises, not much yet in the way of dollars and cents business, but there is some. And there are some things here that impress me. One, the company recently named an independent director to its board who's the CEO of DHL Express China. So DHL is a global freight company and a major competitor to UPS and Federal Express. And to me, that demonstrates a serious approach by EHang for using drones for deliveries in China's crowded cities, and also perhaps a potential partner down the road as all this part of their business begins to develop more fully. Also, EHang is reporting sales. According to its PowerPoint slides, in its second quarter data, the company sold 25 of its passenger drone air taxis in the first half of the year, and that was a near 50% jump from the same period last year. And for those deliveries, the company reported sales of about $21 million in the first half of the year, and appears to be on track to have $60 million by the time we close the books on 2020. Now, if you use the first half revenue and delivery numbers, they work out to a price of around $840,000 a drone, although the cost would presumably come down as the company ramps up its production in coming quarters. Now, there are 4 Wall Street analysts, including one from Morgan Stanley, who cover EHang, and their estimates show a belief that revenue could accelerate to as high as $290 million in the next 2 years. Now, many things would have to go right with the pandemic, not to mention on the regulatory, political, and economic fronts for all of that to happen. But it certainly shows the promise of all this. And of course, the hard part for any company is delivering on that promise. And although the company has only reported losses thus far, as you might expect, given the very early stage of the game here, there's at least some expectation from analysts that the company might even report its first ever profit of 8 cents a share at the end of this year, rising to 63 cents a share next year as drone production and the rest of the business ramps up. Now, I'd sure approach those numbers with no small amount of caution. I wouldn't get my hopes up. EHang is not even cash flow positive yet, but things can happen quickly here. And then again, EHang has only a small amount of debt, which is good. And its gross margins are around 60%, which is also good. It means that with every sale of a drone, the company is keeping around 60 cents of every dollar after subtracting marketing and manufacturing costs. That's a promising sign because it means EHang, or really any company that had gross margins of that level or higher, retains a lot of cash after it makes its sale. And it means that if it can keep those margins up, it would mean that it would be in a position to generate positive cash flow, and it could use all that money to reinvest back into the business and perhaps still have profit left over for its shareholders. Again, this is at a future state. Now, looking at EHang's stock chart here, the company went public late last year, and it's trading at the bottom end of a wide range here between $8 and $14. I think the stock's been held back for a number of reasons. One, it's a Chinese company. Chinese companies and foreign stocks in general remain out of favor. And two, EHang is largely unknown to U.S. and global investors. Most people don't even know that these kinds of full-size passenger drones actually exist and fly. And three, EHang doesn't have any profits yet. However, truth be told, that fact has not held back the share values of other companies on the NASDAQ without profits. And in the case of like the new electric car companies that have been going public recently, they don't even have working prototypes, which doesn't seem to bother any of those shareholders either. So EHang, on the other hand, actually has a production system. It has revenue, and it has passenger drones that actually fly, have been flight tested, and safely carry people. So buying EHang is a speculation for sure, with all the risks that that carries. But while big companies like Boeing and various startups are still developing, still working on passenger drone prototypes, EHang has already moved beyond that stage. It's already busy putting together the infrastructure and the staff to market these air taxi drones and partner with hotels and resorts, delivery companies, and other kinds of enterprises to make urban air mobility a true reality in the world's largest cities. I'm Jeff Yasteen.